Unlocking Profit Potential, Mastering Covered Calls for Investors. Welcome to today's comprehensive guide on mastering covered calls. Whether you're a seasoned investor looking to enhance returns or a newcomer exploring strategic options, understanding covered calls can add a powerful tool to your investment arsenal. In this video, we'll break down the essentials of covered calls, their benefits, and how you can effectively implement them in your investment strategy. In the current financial climate, market volatility can pose significant challenges for investors seeking consistent income. Strategies that not only bolster returns but also mitigate risk are invaluable. This is where covered calls shine, offering an appealing solution for generating income while safeguarding against downturns. A covered call is essentially an option strategy where you own the underlying stock and then sell call options on that same stock. It provides a unique blend of both stock ownership and options trading. Let's understand these two components more clearly. Owning the underlying stock means that you hold a position in a company's stock within your portfolio. On the other hand, selling call options involves giving another investor the right to buy your stock at an agreed-upon price before a specified expiration date. By doing this, you receive a premium, essentially an upfront payment that enhances your overall income. Now, why exactly are covered calls popular among investors? The strategy generates additional income, which is particularly beneficial during times of market stagnation or slight downturns. This added layer of income serves as a cushion, ensuring against potential losses while simultaneously utilizing your portfolio's latent potential to produce regular income streams. When you sell call options, you're engaging in a transaction where the buyer pays you a premium for the right, but not the obligation, to buy your stocks at a future date. Whether or not the option is exercised, you keep the initial premium, which can be substantial when timed well with market conditions. This transaction allows you to generate consistent income even in a volatile market, making it a very appealing prospect for steady cash flow. We aim to demystify the process of covered calls by turning complex concepts into digestible information tailored for all investors. It doesn't require a financial wizard to implement a covered call strategy, just a clear understanding and careful strategic planning. Firstly, select the stock you wish to use for your covered call. Ideally, this should be a stock you are comfortable holding for the long term and one that trades in a narrow range to avoid drastic swings. Next, choose the strike price at which you're willing to sell. This is typically set above the current price for added margin safety. Then, decide on a time frame for the option's expiration that aligns with your investment goals, whether short or long term. Finally, sell the call option in the market. Immediately, you earn a premium that adds to your revenue, enhancing yield and providing a monetary cushion against your stock's decline. Strategically, covered calls can be a vital component of boosting your investment returns, turning latent potential into monetary gains by leveraging options. The consistent income from premiums creates an advantage that, over time, and with the right repetition, significantly enhances your overall returns. A noteworthy merit of covered calls is the risk management aspect they offer. The premium income acts as a buffer against the stock dropping lower, mitigating downside exposure. Through detailed scenario planning, investors can balance the potential for gains with inherent risks, ensuring a stable investment strategy. Suppose you own 100 shares of stock XYZ trading at $50. You sell a call option with a $55 strike price and a month-long expiration for a $2 premium per share. If the stock stays below $55, you retain the premium and the stock. If it rises above $55 and your stock is called away, the sale profit also creates a win-win situation. To successfully implement covered calls, invest time in scenario planning. This involves anticipating potential market movements and how they impact your investments. By conducting thorough evaluations of stock performance and expected future volatility, suitable decisions on strike prices and options terms can be made effectively. Choosing the right underlyings is the linchpin of a successful covered call strategy. Stocks should align with your personal investment goals and risk profile. Favoring stocks with stable performance records and predictable price ranges makes strategic covered calls more manageable and predictable. Precise timing when choosing stocks and options is critical. The stock should not be experiencing recent volatility when entering a covered call. Rather, steady, predictable stocks provide a safer groundwork for potential success in secured call strategy. Through consistent use of covered calls, investors can work toward achieving diverse investment goals, be it steady income generation or growth with inherent protection. This strategy aligns well with varied financial objectives and provides a platform for achieving desired returns. Post-comprehending the entire scope of covered calls, investors are more prepared to harness this strategy effectively. Understanding the relationship between market conditions and their impact allows for a more nuanced approach to each transaction. Covered calls do not just enhance returns from singular stocks, but also fit seamlessly into a diversified portfolio. They complement various other strategies, broadening your investment scope and adding another layer of professionalism and in-depth risk management. Knowledge empowers investors, transforming how they perceive and execute investment choices. By educating oneself about covered calls, investors gain confidence and the skill set necessary to effectively implement this strategy, setting themselves up for success in complex markets. While beneficial in the short term, covered calls also play a pivotal role in long-term strategy planning. They can steadily increase the income streams over time, enhancing portfolio performance and meeting long-term financial goals effectively. Analyzing case studies of successful covered call usage reveals insights into real-world applications, nuances, and extraordinary scenarios. Investors are better prepared to adapt these learnings into their portfolio management tactics. When compared to other investment strategies, covered calls stand apart due to their income-generating potential coupled with risk management. Understanding these advantages aids investors in choosing the best strategies suited to their individual needs. Success in covered calls may be measured through various performance metrics: income generated via premiums, capital gains from stock sales, and overall portfolio growth. Tracking these metrics over time provides insights into strategic effectiveness. Recognizing potential challenges such as market volatility, unexpected stock price behavior, and strategic misalignments helps proactively mitigate risks associated with covered calls. As market conditions shift, so should strategies. Adjusting covered call strategies to accommodate market trends, emerging news, and sector-specific factors ensures continued relevance and benefit. Applying nuanced techniques for optimizing returns, such as adjusting strike prices or expiration dates, can unlock further potential from covered calls, enhancing overall investment profits. Addressing common questions, such as about risks, implementation nuances, and strategic optimization, clarifies doubts and cements covered calls as a viable, understandable option for external investors. Insights from financial experts can reveal valuable perspectives on effectively implementing covered calls within broader investment strategies, providing the expertise needed for confident decision-making. Once equipped with this knowledge, investors are encouraged to try integrating covered calls into their portfolios. Starting with experiments on smaller holdings will help refine skills and build confidence with time. To conclude, covered calls offer a viable strategy for investors aiming for balanced, steady income without taking immense risks. It's a tool that, when used effectively, enhances a well-rounded investment strategy. Now that you understand the potential and application of covered calls, consider incorporating them into your long-term investment plan. Elevate your investing journey today and master covered calls for a financially forward future.